Hi, I'm Bill Lang. You need to invest money to make money. This universal truth means many businesses will one day face the prospect of sourcing additional funds. Today, we'll look at the key questions you may need to answer when considering which funding option is right for your business. The type of activity you need the funding for will affect the option you choose. Some of the reasons you may require funding include to purchase capital items, also called fixed assets, such as plant, equipment, land or buildings, or motor vehicles. To increase holdings of trading stock and supplies. To fund research and development. To expand distribution or develop new markets. To maintain working capital while you wait for payment of existing invoices. Now let's hear from a NAB Business Banker who will outline the various funding options available to your business.
The types of finance options available to small businesses are, we have an overdraft, which is like a line of credit for business customers. This offers them flexibility. It is linked to their everyday overdraft or a general check account where they can draw upon funds with a limit offered, and that helps them if they had to pay wages or buy stock and any other goods for their cash flow purposes, and when they do get money paid to the invoices, it goes back into that account. So that's a really good product that suits most of our business banking clients.
Business loans are another facility that we offer. Now, business loans are ideally suited for long-term assets. A great example is when you buy a building. If you buy a building, a business loan would be ideal. It's a long-term setup for a long-term asset.
Asset finance, that's one of the very good products of the bank, where we actually can do leasing, equipment loans, hire purchases. When the clients are looking at purchasing plant, machinery, equipment for the expansion, maybe as simple as directors buying a car for the business, vans, delivery vehicles, computer IT equipment, all that stuff can be done.
When determining the specific finance needs of your business, ask yourself these questions. Firstly, how much do you need? Secondly, do you need to access the funds semi-regularly, or are your needs based around a one-off upfront requirement? Thirdly, what's the best loan term for your circumstance? Fourthly, will a fixed or variable loan work best for you? Fifth, what's your capacity to repay the loan? And finally, what security can you offer the lender?
There are many factors that affect the amount that a customer could borrow from the bank. One might be the type of business that they're in. What's the profitability of their business? What's the ability to repay? What are they buying? We lend different amounts against different assets. You can borrow more against a house than perhaps you can against a car. The security that the customer's offering. So the more security you can offer, the more comfortable we are in lending more money. Another critical factor might be the equity that a customer can put in. So how much money can they put in towards the asset that they're buying? The more they can put in, the more, again, we'll be comfortable in lending.
Download the business action plan for this episode to learn more about which funding option is right for you.